Good afternoon, everybody. It is 7-Eleven. It is free Slurpee day out at 7-Eleven. And you are watching MarketStream.live and the closing bell. Now, before you run off and go get your free Slurpee from 7-Eleven, let's recap all the action here on the markets today. It was an interesting day to say the least. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And the bottom line is that we had no volatility today. Now, we did have some headlines, and it was interesting. This market reacted to two things. One was some dovish comments from Fed President Barnard, and also some headlines that came out about Trump Jr. and release of some of the emails as it pertains to the Russians. Now, the market obviously showed that it had some sensitivity to that. Immediately pulled back. You saw that the S&P 500 was down 13 points, but it recovered. As a matter of fact, if you take a look at the Dow Jones, it finished up basically flat. But again, it's right on that 20-day moving average. So watch the 20-day moving average right now on the Dow. We're coming into earnings season. This is the level that you're going to want to watch for the short-term bulls, the bulls that have been getting into Dow stocks in the last 20 days, and specifically into the industrials. Watch 21,356. That is going to be a level that, if broken and the market settles for the next 2 days below that, short-term bulls are going to be on their heels. Then you're going to want to watch 21,177. That's the 50-day moving average. Now, the diamonds, again, weren't moving much as well, but you'll clearly see that they are, too, in a battle zone at the 20-day moving average, but still above, so the bulls have still contained and retained control. Now, where control has been put under pressure has been in the S&P 500. Most notable reason why, about 25% of that index is financials. Now, the financials were taking it on the chin today because of the fact of the headlines that were coming out from one of the Fed presidents, Brainerd, who said that he's getting a little more dovish. He thinks that maybe rate hikes are over for the year. That is not a positive signal for anything that's interest rate sensitive, and financials are. As a matter of fact, you saw some of the financials come under pressure. What's going to be very interesting is, folks, Friday we have earnings on JP Morgan, Wells Fargo, and so forth, just to name a few. Some of the large cap banks that could move this market either to the upside or downside. Right now, short-term bulls are on their heels. That 20-day moving average, we finished below that 24.27 level. We're at 24.25. So, folks, we're going to watch a battle start here. Watch the spiders. Again, a level that you're going to want to watch is the 242.34, and then watch the 241.10 level on the spiders. That's going to be a critical level for the bulls to hold. Now, the Nasdaq, which has been the darling of the market, finished up in the green today, up 15. But here's what's notable. You can see a contraction of the trading range right now. The 20 and 50-day moving average are starting to collapse on each other. That means that we have some, let's say, really grindy neutral trade. When you get into those environments, it's like being in a quiet room. As soothing as that is, you start to get a feeling of uneasiness if it continues for any period of time. So with that being said, watch on the Nasdaq 100, watch 56.97 and 56.70. As those levels start to converge, the 20 and 50 day, you're going to want to see expansion either way to get some directional bias. Right now, haven't seen it, and this has been a market that has been leading to the upside. Any weakness in large cap tech, the FANGs, whatever you want to bring out, chips, biotech, I don't care what it is, any weakness in there, that's going to put some potential volatility in these markets because it is really consolidating right now and uncertain as far as direction. So we'll watch that. The Russell 2000, though, that bounced very well off of its lows. It did finish above its 20-day moving average, which is at 1410. So the bulls continue to stay in control. That's a potential positive for a reflection of what could potentially happen with financials, because financials are a big component of the small cap index, especially in the regional banking side. So we're going to watch this one very closely, but this could be a more volatile index than the other three large caps. What I'm going to be watching is 1410 on the Russell 2000 as well as 1400. And IWM, I'm going to be watching the 140 mark. And the reason why, specifically 140.30, the reason why is that the index actually finished the day at 140.28, which is right below its 20-day moving average. So you could see in the ETF, it's reflecting a little bit more of a negative sentiment for the short-term trend of the market, but overall still bullish. A challenge of 139.40 would be putting the overall trend in question, and it could move, especially if we get some mixed earnings. Now, taking a look at commodities, crude oil still has not been able to get above that $45 level. Now, it did come off of its $44 level. Watch the EIA report. We're going to have an inventory report tomorrow. That could move this market. Again, in full disclosure, I have positions in both small caps as well as in the oil markets as it relates to oil, also oil services. So just be aware that we're in an environment right now where obviously we have seen that commodity space, specifically crude, been under pressure. You can continue to see that in Brent. It has been trying to retrace off of its lows. It's grinding now. Gold, able to make a small little comeback off of its lows that we saw earlier today, but still on its lows and in a bearish trend. We got a lot of work to do there. What was notable? Copper. Copper continued to grind to the upside, finishing at 267. That's interesting. As I said, this non-ferrous metal is also a good precursor on potential growth, specifically in the industrial sector, material sector, infrastructure sectors. This is one that you want to watch. We've had some good housing data that's come out recently, some decent economic data both here in the States and globally. So we're going to keep an eye on earnings to see if that shifts. Bonds, this is interesting. Bonds recovered today. You saw the TLT actually finished up 23 cents. It's still just basically grinding right now after what had been a pretty precipitous drop in bond prices. That means yields came up. But with this current discussion that the Fed may be holding off on any further rate hikes, as I noted, and looking at the Fed funds tool that the CME has, there's only about a 56% or 57% probability that they're going to raise rates in December, which would be probably the next logical area or time frame when they would. But the U.S., the 2-year, the 10-year, and the 30-year were all up about 0.2% today. I'm watching that yield. As I always have said, I watch the yield on the 10-year. Why? Well, because that gives me a good perspective on anticipation of further rate hikes, as well as movement of money out of the treasuries and into the equity markets. And it came off of that 2.4%. It's at 2.35%. And again, any drop now below 2.3, 2.25% on the 10-year, that's going to basically mean that any yield pop that anyone was anticipating, that's going to come under pressure. Probably because of the fact that no one knows how quickly or how aggressive the Fed's going to be about unwinding the balance sheet, that $4 trillion in assets. And if they're not going to raise rates, but they're unwinding that balance sheet, folks, that could be a little bit of a mixed message and potentially problematic for the equity markets for a short period of time. Watch Jamie Dimon's commentary on the Fed and what he perceives as how they potentially could be unwinding that balance sheet. It'd be interesting if he makes any specific comments along those lines, especially since JP Morgan Chase has earnings coming up. So some potential market moving events that are coming, little bit of movement, but I will tell you this. Keep the powder dry in this environment. If you see some notable winners, you have some uncertain feelings, it's best that you start taking a look at your portfolio. And really in this environment, if you're feeling a little bit unstable, talk to your advisor, reach out, do some studying and some homework, really get a good feel of risk reward, probability of success. And if you ever have any questions, you can get a hold of me at jcusick@moneyblock.com. I'll help you as much as I can. Also, if you have any questions or considerations, get a hold of MarketStream, info@MarketStream. All right, folks, that is it right now for the closing bell. We'll be back on bright and early tomorrow morning here at MarketStream.live. See you then.